Have you ever had one of those trades that you got your 10 pips or your 20 pips, but it went 150 pips? And you think to yourself, I could have made like an additional 16% on my trade. In this video, I'm gonna show you one of the best tools that you can use in order to trail your stop loss so that as your trade goes up, your stop loss keeps moving up with it. Welcome back to the channel, everybody. My name's Artie, and this is The Moving Average, a show where we discuss everything day trading to keep you profitable. I made this video a little while back, but I figured I'd release it to you guys now. I actually have like 15 videos I haven't released to you guys, and I'm going to slowly do that over time. This will show you how to do a trailing stop loss on your analysis on TradingView, as well as in the app on your MT4 platform. Keep in mind that the tool that I'm using on here is the Trading Floor Risk Calculator. Okay, let's go over this example. So currently we are in an uptrend on Australian dollar, US dollar. We had a little three-line strike right here. This did not reject off of the 21, but maybe like the 7 if we were to change that moving average. Regardless, let us get into a long position at the close of that candle, and our stop loss could be below the previous swing low. Or if you guys want to stay nice and comfortable, you can keep it at 10 pips. Now, let's just say for the sake of this example, we're going to do 10 pips and 20 pip take profit. Now, when looking at a trailing stop loss, essentially, this is going to be your 2-to-1 risk to reward ratio. So I'm pretty convinced and under the impression that once you get to a 1-to-1 on your risk to reward, you should move your stop loss to break even. That means that once you get 10 pips in profit, your stop loss should be break even because then it's a zero risk trade. Now, once you do start getting into profit, and let's say that you have moved your stop loss to break even, you are essentially keeping track of market structure. You are looking at these low points and using those to judge your stop loss, because we know when market structure is broken, failure to make a higher high and making a lower low, then the price might either consolidate or make a trend reversal. So as you have manually moved your stop loss to break even already, and you are 10 pips in profit, what you can do now to get the most out of your trade is slowly start moving your stop loss to these higher lows. Once it breaks past this one, makes a new low and starts going up, that is your new stop loss. Again, went up, came down, that is your new stop loss. Price started to go up and hit your trailing stop loss. If you do this and you keep your trailing stop loss too tight, you will get closed out of a position like it did right here. What you can also do instead of every single one of these higher lows is essentially keep your stop loss along the 21 moving average. Monitoring your trade instead of just letting it play out is far more stressful and far more difficult. But when you are swing trading, this could be highly beneficial because you could get a massive move out of it and hold a trade for multiple days or weeks. But if you're scalping and you've already decided on your risk to reward ratio, I think this would be an easier option to just let it play out. But if you want to do trailing stop losses, this is how you should do it. Okay, now looking at this exact same trade on MT4, you can see that we got a 3-line strike right here on the charts. But on MT4, because of the price difference, it did not pop up, and this is what I was watching, so I got into this trade extremely late. This was the original 3-line strike, and I got in right here 2 candles later on the 1-minute chart. So using the risk calculator, having my stop loss below the swing low with a 1-to-2 risk to reward, this is how it looks now. There's one of 2 ways to do a trailing stop loss on the MT4 platform. If you already set your position with a stop loss and a take profit, you can right-click the active trade and click on the option called trailing stop and either set it at 15, 20, 25, 30, 35, 40, 45, or 50 points or make custom. This 15 points is not 15 pips. It is 1.5 pips. So if you have a
50-point stop loss on a Forex pair, it's going to keep your stop loss 5 pips. So the price must get 5 pips above your entry price before it adjusts. The second way of doing it is clicking your already active stop loss and dragging it to modify. So you can see here, I can drag this and move it wherever I would like. So my current stop loss is here. The price is currently above my entry. Maybe I might feel a little bit more comfortable and lose less money on my trade if I move my stop loss to this previous swing. So previously it was here and I just moved it up 1 swing. So now with price going in my direction, and I originally risked $500 for this trade, which is 1% on a $50,000 account, I'm now risking about half that amount. So if it does hit my stop loss, I've only lost 200 while it's still going in my direction. So this trailing stop loss is also known as a trailing step, because every time price goes up 10 pips, your stop loss will go up 10 pips. So it's essentially like a ladder. Okay, so continuing on with a trailing stop loss using the TTF risk calculator. Right here you see a button that says TS. That is for trailing stop. The first box is how much the price must go up or down in your specified direction in order for the trailing stop loss to start generating. Once it gets to that point, then your trailing stop loss will be specified to the second box, so 10 pips. So once the price goes up 10 pips, your trailing stop loss will now remain 10 pips behind the current price action. So currently on this position, our entry price was 70092. And it is at 70230. So we could actually set our trailing stop loss right now because it is 10 pips above the entry level, and we can maintain a 10 pip stop loss at this point because it's kind of getting a little bit of resistance, which is also a previous high point. So what you need to do is in the drop-down menu, select the trade that you have open and then just click TS. And as you can see, my stop loss line right here is now going to stay at this level. And if price keeps dropping, which would be exactly 10 pips, my trailing stop loss would be hit. If it continues up and up and up and up, this will continue to go up with that until it has retraced 10 pips. See how as the price moved up, the stop loss moved up? This will continue to go up and stay 10 pips to this candle or wherever the price goes. Fuck yeah. Take profit hit during that shit too.